In other news, Venezuela is facing pressure on its oil exports after the United States seized a tanker carrying sanctioned crude. The move is forcing state oil firm PDVSA to offer deeper discounts, renegotiate contracts, and deal with cargoes stuck at sea, raising new questions over how long the country can sustain its oil revenues. Venezuela's state-run oil company has been struggling to move crude after the United States seized a sanctioned tanker off the country's coast last week. The U.S. Coast Guard intercepted the vessel's skipper, marking Washington's first seizure of a Venezuelan oil tanker or cargo. The U.S. also imposed sanctions on 6 additional ships and their associated companies. In the aftermath, Venezuela's oil customers, especially Chinese refiners, are demanding steeper price discounts and changes to contract terms. Traders say the company is facing cargoes stuck in Venezuelan waters and tankers turning back at the request of ship owners. Discounts on Venezuela's flagship crude shipped to China have widened sharply. Now as much as $21 per barrel below Brent, up from $14 to $15 just last week. Much of the added cost comes from a so-called war clause demanded by ship owners to cover the risks of interceptions, delays, and rerouted cargoes amid increased American military presence in the Caribbean. Since U.S. sanctions were imposed in 2019, PDVSA has relied heavily on China. This year, though, between 55% and 90% of Venezuela's monthly oil exports have gone to China, which is up from 40% to 60% last year. According to vessel tracking data, in November alone, Venezuela exported 9,52,000 barrels per day, with 7,78,000 barrels per day shipped to China. But competition is intense. Chinese refiners already have ample access to discounted Russian and Iranian crude, also under sanctions, weakening Venezuela's negotiating power. Traders say more than 11 million barrels of Venezuelan oil are currently stuck on vessels as buyers push for further discounts and loose payment terms. Some are also seeking reimbursement for added costs or fees caused by shipping delays. Remember, PDVSA has also been hit by a cyber attack this week, knocking out administrative systems and forcing a temporary halt to oil deliveries at some terminals. The only exporter operating without major delays remains the US-based Chevron. Tankers chartered by Chevron continue to load and ship Venezuelan crude to the US under a special authorization. Analysts warn that if these disruptions persist, Venezuelan oil supplies to China could drop as early as February next year, further tightening the country's main economic lifeline.